ABV Nation, all of YouTube, my name is Patrick France, Senior Instructor here at VectorVest, and today we're going to be comparing two lower dollar speculative plays that we've been covering here at VectorVest for quite a long time. That's right, we're going to be analyzing Senseonics Holdings and also Exro Technologies, since both of them has had a pretty big sell-off since the market started selling off as a whole since November. We're going to be analyzing the two and seeing which one is a better play at this time. So if you're ready to learn, make sure, as always, smash that like button, subscribe if you're not already subscribed, and let's jump right into it here today. All right, welcome back. So we've got two different stocks here from very different areas of the market. First, we've got Senseonics Holdings, which makes medical devices, and then the second is Exro Technologies, which makes a battery control system to help increase the performance of electric vehicles. So both areas are very promising, and we're going to be taking a look at these two stocks to see which one is better right now. Let me know before you get through the very end of this video which one you think is the better performer or which one you like more out of the two. So with that, taking a look at them, both of these stocks are currently overvalued. As of the close, we're looking at Friday's closing data. Senseonics Holdings closed at $3.35. Exro closed at $1.16. Both of their values are 31 cents and 24 cents respectively. So therefore, that means both these stocks you are currently paying a premium based on the current fundamentals of the stocks. Not a projected value, just what these stocks are worth right now. After the value, the next four indicators we're going to be looking at are cast on a scale of 0 to 2. We keep it easy here at VectorVest, so all you have to remember is above 1 is good and below 1 is bad. So the first indicator we're going to be focusing on is RV, or relative value. This is looking at the long-term potential of the two stocks. So both of them are poor. RS is also going to be poor, which we'll talk about here in a second. And that just tells us these are speculative plays. These are smaller companies, so therefore, yeah, the fundamentals aren't going to be the biggest impact, but they do want to give some good signs or see which one has the best of the two. So looking at them here, Senseonics Holdings wins that competition, coming out with a slightly better long-term potential over the next 1 to 3 years when compared to Exro. Then we look at the RS, or the relative safety. So this is just simply a safety factor. You know, how much risk is involved with this stock? And the higher or the closer to 1 it is, the less risk it is. So right now we can see Senseonics actually has a little bit more risk when compared to Exro, but both of them incur higher risk than the average stock out there. Just keep that in mind when making that decision on your own. But Exro gonna have to win this one. So right now we're tied 1 to 1. And then the tiebreaker is going to be RT, or relative timing. Now this is looking at the short-term price trend of the two stocks. So above 1, short-term trend is up. Below 1, short-term trend is down. Well, we've been in a down market for quite some time, so both of these stocks have been getting beaten up pretty bad. But Senseonics seems to be rallying back or getting back on track a lot faster so far than Exro. So right now, Senseonics has an RT of 1.54, telling us it's in a pretty strong short-term uptrend currently. Whereas Exro, RT of 0.15 tells us it's in a pretty strong decline. It's not recovering off of these lows that we're seeing so far. So right now we're 2 to 1. Senseonics is definitely going to win the case based off the VectorVest indicators and the analysis. So just to quickly recap, Senseonics has better long-term potential, a little bit more risk, and a strong uptrend right now on a short-term basis. Whereas Exro has poor long-term potential, a little less risk associated with it, and it's still not really getting in an uptrend currently. Right now, both of these stocks have a hold and a sell rating respectively. So just by the numbers standpoint, Senseonics is definitely going to take the cake so far. But let's keep diving into it a little bit more to see what else changes. So if we scroll over, one thing I definitely want to bring up here is talking about the number of shares available. So Senseonics has 445 million shares out there outstanding. Exro has 120 million shares outstanding. You may be asking yourself why I'm bringing this up, because the next thing we're going to do is we're going to take a look at the news. You know, before you ever buy a stock, you want to check out not only the analysis of it, but see what the headlines are coming out about these companies are, And then, as always, we want to finish off taking a look at the graph. So let me go ahead, just pull up the news real quick here. And starting off with exro. So a lot of the headlines recently for exro have been relatively bearish. You've seen talks about new dilution or share raising, if you want to call it that, but essentially diluting their stock. You also have just recently talks of lawsuits coming in, patent infringement lawsuit, which, at first sight may seem bad. When you dig a little bit deeper into it, there doesn't seem to be a whole lot of merit based off of these lawsuits coming out, but we'll have to wait and see how that develops. But from initial glance at it, doesn't look like it's going to be something that will drag the company on and on without letting them get to the business that they're set up for. So a lot of negative headlines, however, though, with exro. Now, let's go over to Senseonics, take a look just quickly at the headlines that we see here. So looking at it here, we can see a lot of news about different funds buying Senseonics. We also have a headline coming out where they expect the FDA to pass one of their devices soon. So that could definitely be a game changer for it. But what we're seeing based off just the headlines, just doing a quick glance at the headlines. Senseonics has a lot of positives coming out so far with potential approval from the FDA. Also, you have funds buying into Senseonics or adding them to their funds. So that's definitely a positive sign. Whereas exro currently, we're seeing a lot of negative news. Now that could quickly change. As we know, news could change very, very quickly or very rapidly in these current markets. So that could change after this recording, but for right now, we're seeing a lot more positives on the news side of things from the Senseonics rather than the exro. All right, and last but not least, what we're going to do is we're going to jump into the graph and take a look at the big picture or the chart of these stocks and see what those show us as well. So we'll just get out of here real quick, and then we'll graph all these, maximize them here. And so just to quickly go over my graph, my layout that I have, if you're not familiar with it, if this is your first time, first and foremost, welcome, but let's go over that together here. So what we're seeing is the price shown in candlesticks. You have a 3 and 8 exponential moving average, which shows short-term momentum. And then below there, we have the DPO or the detrended price oscillator, stochastics, MACD, and then volume here at the bottom. So with Senseonics, we have had that sell-off ever since about the beginning of November, just like most stocks out there in the market. But we have seen ever since about the beginning of February, since the news started coming out that they were getting ready to get that FDA approval on one of their new medical devices, we have seen this stock rallying back, getting back within its range that it was in most of the second half of last year. Now, if you're familiar with some of the charting that I like to do, you'll most likely know where I'm going with this. But one thing that definitely stands out here is when we look at the overall chart over the last year, I'm going to go ahead, use the freehand lines, and just quickly draw this here. But we see, there we go, lower highs being formed. And since the low of last year till now, we actually have higher lows being formed. So this is what we like to call the wicked wedge, which is a consolidation pattern. We can see a breakout of this consolidation that could lead to some explosive movement in either direction. As we can see, we're getting closer to the upper part of that wedge. And if we can break that upper part of the wedge, expect an explosive rally to come into this stock. So definitely something I'm focusing on as we move forward here. One other interesting point that I want to just highlight when we look at Senseonics graph here, just deleting out of those, there we go, and changing it to a horizontal line. This most recent sell-off that we've seen has come back and filled this gap. Well, gaps tend to fill 90% of the time, so the gap has been filled now, and now we're starting to see a new run. That's definitely an extremely bullish sign that we're noticing with Senseonics just from a chart standpoint. So overall, I like what we're seeing with this one. This is definitely showing signs of life, and especially once they get that FDA approval, you can expect to hopefully see it break that upper part of that wedge and continue to move higher from there, creating hopefully some new highs, which is going to be set around the 550 range, where right now it's trading $2 off of that high, so it's trading around the 350 range. Now, that's what we see with the Senseonics graph. Let's go take a look at the exro graph and see if we see anything that shows us why exro may be better. So we'll go ahead, jump into exro's graph. Well, for anybody not familiar with this stock, I highly recommend, if you're not familiar with it, go check out some of the videos I've done in the past. I've talked about all the headlines that have come out and really given my thoughts on those. But to basically summarize it right now, exro back around a year ago had a short distort report come out that was pretty terrible, had no author, nobody backing it, and just had a lot of inaccuracies in it. Well, that was enough to cause an initial shock factor, which sent the stock plummeting from about just of its high of $6 a share all the way down to that $2 range. Well, exro doesn't actually sell anything currently, so therefore they haven't had any sort of news of sales or growth or revenue coming in. So the narrative has still been the same, that the stock really doesn't have a whole lot going on for it from an outsider perspective. Doesn't mean that I think that, doesn't mean that they're not doing the right things or they're getting ready to start having some sales. It just means from an outsider view, when you just looked at the headlines during that time, that's the kind of impression they wanted to give to people. Well, exro was moving sideways after that short and distort report for quite some time, hanging out between the $2.50 to about $4 range. And then all of a sudden, you had the market starting to sell off in November, which exro got hit from that. So no surprise there, most stocks did. But then you also now had the news of a patent infringement lawsuit coming up. And that has really driven the stock even lower from that $2 range all the way down to the $1 range. So while I think senseonics definitely is the better chance or better choice right now, especially based off the charts, based off the information that we've seen, based off the headlines, exro being in a electric vehicle industry definitely has better longer term potential, but doesn't have that short term potential, at least so far. Now, I could be wrong. Maybe, hopefully, in the next week or two, we hear some news from exro about some new developments going on in the company or some new sales that they have lined up. But for right now, based off the current information, based off everything out there, senseonics definitely going to take the cake here. So sorry, exro lovers. I do apologize. I love exro. It's in my personal portfolio. Well, actually, both of these stocks are in my personal portfolio. But for right now, exro really needs to change that narrative. And until the narrative gets changed, we're not going to see much change in their stock price. Now, with exro, there was some news earlier at the end of last year, end of 2021, about potentially getting added into the NASDAQ. But so far, we haven't heard anything from that. And I think, if I'm not mistaken, you have to have a price tag of $3 or higher to be added in that index. And at $1 a share, you're not going to be able to get in there. So that's going to really hurt it. And then as well, you have dilution, which could also hamper the stock's growth. More and more shares being sold without actually having any income coming in is not a good sign. So what I want to see from exro before I change my mind, or before I would say, okay, exro is definitely the better competitor of these two, I need to see exro start generating some actual income, showing that they have some contracts lined up to sell some of their BCS systems to some major manufacturers, or just some deals coming out, not just with these small groups or small partnerships, but a deal with a major US manufacturer or a major Canadian manufacturer. Most of their partnerships have come through testing and validation. Now it's time to put your money where your mouth is and start selling your product. So once we see sales from exro, then maybe I will do an update on this. But until that point, senseonics definitely is going to be the better option of these two, especially for the current environment. So if you've made it through this whole video, let me know your thoughts down below, what you think about it. Maybe I missed something. If I did, let me know. And if not, well, I am glad I did a good job here with this one today. So until next time, it's been my pleasure being with you. I hope you all have a great rest of your day. Take care, adios, and toodles.
Yeah.